Hello, everyone. This is Mohammed Akif with Akif CPA, and today I'm here to talk about Canadians who are planning to move to US. Let's say if you're on an employment visa, which could be O, L, H, E. There are many, or through family sponsorship, it could be your spouse, could be your brother and sisters, could be your mother and father. Any of those Canadians who are looking to move, who are planning to move, and then why they should be looking at tax planning, understanding of the US system, understanding the taxation, how this is going to play out, why they should be looking at this before they move to United States. It is very important. And I'm going to point out some of the important things that really happens. And then, the whole purpose that you're trying to do. So we'll be discussing this video in multiple sessions, meaning that I'll be covering tax consequences of leaving Canada. I'll be covering what happens, how things are on the US side once you do move. And I'll be comparing the US system versus the Canadian tax system. I'll be also talking about how the final return the Canadian side should be if you do end up leaving. And then also on the US side, how the first return should be, and what are the common things that should be included in there. Uh, Definitely, I've made videos there in terms of tax issues for Canadians who have moved down to US, are in many different scenarios. I've covered many of the topics, and I'll be covering more topics as we go on. So this video is a part of a continuation of stuff that I'll be covering in terms of tax consequences of leaving Canada, and then the Canadian tax, the US tax, the comparison of the systems, and the filing of the final return, the first return on the Canadian final return on the Canadian side, the first return on the US side, and then some of the common tax issues that I come across for Canadians who are more looking to move. So let's get into detail and why. Number one reason why I think that tax planning for Canadians when they're moving to United States is so important. I mean, I cannot stress enough. Why is it important? And then I'll give you some points, and then we'll talk about what's the whole point of going to US when how you lose the purpose or the bottom line when you don't do this, what really happens. And then so I want to discuss with you in terms of in detail in terms of how this plays out for Canadians when they move to US for employment purposes, so or for family, any of this. So the majority of the Canadians, when they are moving to United States, they're moving for better economic terms, more pay, better weather. This is the basic criteria. So you're leaving this country that you've been in, as long as you have lived. You know the people around, you know the system around, you know the country, and then you are moving to United States for better economic reasons. That means better pay, more money in the pocket. So that's the whole goal here. That's number one. Generally, that's the number one goal that people are always looking at when they're planning to move to United States or they're moving to US. So what happens when you don't plan? That's number one thing, right? I mean, so what happens when you don't plan in terms of taxes? I know I've come across a lot of people, I've talked to a lot of people, and then it is not on place. It's just too many things to juggle around. But I will tell you that's the taxes should be the first thing that you should be looking at, because the whole purpose is for better economics, meaning that more money in your pocket. So if you don't plan this, then you're losing on that side. And then you're losing big on that side. And that is in terms of more fees for the tax return, number one, more reporting on the US side. And then when you don't are you when you're not properly filing the return, that means more penalties. And penalties are not the same as the Canadian side. So we have to come around this idea that yes, definitely I'm going there for a job, a better paying job, better climate, and then I will have more money at the end of the year. But if you don't do certain things before you move, If you don't take certain actions before you move in terms of bank accounts, in terms of investments, in terms of consolidation of the assets, so many different things. If you don't do that, you will end up paying more taxes. You will end up paying taxes on items which are not taxable in Canada. You will end up reporting for more, that will cost you more. And then, again, if you miss those reporting, then the penalties are more. So if you start adding up all these things where you're paying more tax, at the same time paying more to a professional to do the return, and on the top of that, if somebody there's missing information, then there are penalties. So, if you combine all that amount, that might end up being more than the tax. So why you want to put yourself in a position where you end up owing money to US, even though you never intended to? So there are many things that happens. And again, the US tax system is much different than the Canadian tax system. They're not the same thing. US foreign reporting is rigorous. I mean, it is and is heavy. So the US requires, the IRS requires a lot more reporting for a US person living in the United States, which has foreign assets, foreign bank accounts, foreign investments. It's just a lot more reporting. That means that there's a lot to handle. So you want to plan, you want to simplify, you want to make it easy when you move to US. You want and then you want to make it easy when you move to US, when it comes down to reporting, filing, and then at the end of the day, taking more money home. So tax planning is very, very, very important before you move to United States. For Canadians, it's very important. It's very important to consolidate some assets, close down some accounts. It's very important to make sure that you simplify your situation before you move. And that includes a lot of different assets that you will not even think about. When you're living in Canada, you're going about your day, about your year. I mean, nothing's going on. You get a T4, you get some other slips, you file your tax return. That's it. But that's not the case on the US side. US requires you to file information forms. In certain cases, requires you to pay tax when things are even not taxable in Canada. And I'll give you a big example. For example, TFSA. The IRS does not have any regulation about TFSA. So on the Canadian side, the TFS is all after tax investment or contributions, and then every earning that you're getting in that account is all tax free. There's no tax on it because the contributions are all after tax. But that's not the case on the US side. Think about if somebody has 30,000, 50,000, 100,000, and then you're getting 8% every year. And then on the Canadian side, there is no tax, but on the US side, you'll be taxed. So what's the point of having that account? What's the point of having that account if you're getting taxed on the other side of the border? And the whole point of that account is to be non-taxable. So there are plannings around those. And then so this is one example. And I can go on and on and on. So it's very, very, very important that you plan ahead. You plan ahead before you move, you consolidate, you simplify, you make your reporting easy, you make your compliance easy, you make your tax filing manageable on both sides of the border. That's the most important thing. My whole goal is to simplify, is to where you can manage, where you can understand and make decisions. Otherwise, if you don't do this and you move there, you lose certain opportunities. There's certain more reporting requirements, and you prolong the pain. You prolong the expenses. You prolong the tax paying that you will be doing. So how long should I? The question comes into my mind is how long should I expect to spend on planning and preparing for my move? It really depends on your portfolio. If you're simple portfolio, it could be one consultation call with any cross-border accountant. Anyone who understands how things work on both sides of the border. And then you can pay a couple $100 and then get the information, make decisions, and simplify your life. Or get down to the US. Next thing you know, their reporting requirements, no one told you about, asking you certain questions. And then if you do miss them or you're trying to you file them, you don't know about them. And then what happens? you get into a position where there could be penalties. So paying a couple $100 beforehand is an investment. It's saving you from all the troubles, the hassles that are about to come. So how much you'll be spending, it really depends upon you, your portfolio, and then I will recommend that you should do this way ahead of time. Make sure when you're getting a job, when you know that this is coming up, talk to a professional. Talk to a professional who is a cross-border guy. Don't or girl. I mean, any one of those. Uh, don't talk to just Canadian side. Don't talk to just the US side, because a lot of Canadian accountants don't know about US taxes. A lot of Canadian accountants don't know about the departure taxes on the Canadian side. A lot of US accountants don't know about the reporting requirements for Canadians, special tax treaties, special exemptions, the way the assets should be reported. There are a lot of them, and majority of them don't know about this. So find a cross-border accountant, could be anyone, whoever you like, and then talk to them. And then make sure that you understand how things will be when you leave, how the US is going to tax you, what the Canadian side, and then you plan before you move. So you make your tax situation simple, manageable, and then where it becomes also less costly, right? You want to be paying less money, as much less money as possible, to a tax professional. So when you should speak to your cross-border CPA before you move, uh, as soon as you find out that you're moving or you're thinking about moving, the first thing should be that let me talk to someone who's a professional. Let me talk to a cross-border professional. So as soon as this happens, where you know that this is going to come up in a year, 6 months, 3 months, 2 months, whenever you find out that, or you are planning, make sure you talk to a cross-border professional. And then, because everyone is unique, so some cases might require more, and some cases might require less. But you don't know, right? So talk to them as early as possible. So when you should be talking to a cross-border CPA before you move, as soon as you find out, as soon as you plan, as soon as you think that you should go there, talk to a CPA. Right? So these are the important things, and that's the reason I want to make all these other for my fellow Canadians who are planning to leave Canada to US for employment purposes or family purposes. I want to make sure they understand the tax consequences of leaving Canada. I want to make sure that they understand how the final return should be on the Canadian side, how it should be. I want to make sure that they understand how the US return, the first return, should be on the US side. Secondly, compare these systems, how the Canadian system works and versus how the US system works, so you can make better decisions. Of course, there are a lot of tax planning opportunities that can come, but every situation is unique. Uh, Definitely, you can reach out to any cross-border accountant, and then they can help you. But make sure you understand, and make sure you plan ahead. Make sure you plan ahead, because I've seen many, 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 many cases where people don't plan, and then they get into a situation. I'll give you an example. Recently, I was dealing with a client who has a family member. So client who moved to the United States 2 years ago has a family member who was a chartered accountant in Canada, did the Canadian return, and then also the US return on the Canadian side. Of course, the person, I'm not saying that the family member was not qualified enough. It's just that they didn't know the rules. They didn't know the rules. Is the tax system is huge. Not everybody knows everything. So they end up making mistakes on the Canadian return. They end up making mistakes on the US return. So we had to fix both the Canadian side and the US side, because they didn't know the rules. They didn't know how things worked when someone moved. They didn't know how the Canada was taxing you. And then in one year, they end up paying $15,000 extra to CRA. $15,000 extra to CRA, just because they didn't know the rules, they didn't know how things worked, they didn't know the cross-border situation, and they kept filing the same way, where they missed a lot of reporting. They missed foreign reporting on the US side. Again, we were dealing with some penalties. There was no, again, a family member who was a chartered accountant. If a family member of a chartered, a person who's a chartered accountant and is a family member can miss those, think about all the other people that this can happen to. So this is very important. You find somebody who knows both sides, who knows the US side, who knows the Canadian side, that can help you plan, help you understand how this works. And then I'll be doing a lot of the videos too, where I'll be explaining this in detail for you to understand each account on the Canadian side, on the US, how they're taxed on the US side, the returns, the issues, some of those issues, and the tax system, so you can make better decisions. You can simplify your situation, you can manage your situation, and then you pay less fees to a tax professional. So the first year returns and the last year return on the Canadian side and the first year return on the US side are the most important returns. That dictates how things will be in the future. So make sure we plan ahead. Make sure you get this done before you move. Make sure you talk to a cross border before you move, so you can take actions. If you have any questions, shoot us, email us info@akifcpa.com, and we'll be happy to help you. Thank you.